In the previous video, I have shared with you the levels that this stock needed to hold. Firstly, for direct continuation within a more realistic move up, a potential internal wave 5, and then the levels to maintain the trend that would allow a potentially less realistic move to occur, a much stronger move, but that would have been needed for the momentum to not see a decline. Welcome to the trade setup. Today we are looking at HIMS and HERS health. We are exploring a couple of possibilities, a couple of scenarios that would still allow this stock to see the reversal, but we will also be talking a bit more about the risk today. Now, in the case of this stock, I have presented several ways it could see continuation to higher prices to potentially quite high levels. I still believe that to be a realistic possibility, but unfortunately, the necessary developments that would have still allowed a direct breakout to be of high likelihood have unfortunately not managed to follow through. Now, in the case of this structure, I was looking for an impulse to potentially form where this could have been the wave 1 up, this would have been the wave 2 down, and I would have liked to see a wave 3. For this wave 3 to be a realistic pattern, I needed a strong move up. I needed this move, this single wave 3, to reach the $69 level, the 138.2% extension of the wave 1, assuming I have drawn this correctly. Well, we are nowhere near those levels, and the momentum has seen an unfortunate dip, so what are our current options? Well, firstly, I want to start by highlighting the risk. The levels of resistance up to the 61.8% retracement in orange, $36, have not seen a sustained break. It has initially pushed into it, rejected. It has managed to get a brief break above it. Eventually it fell back down, and once they got retested from an internal move up, rejected again. This could be the beginning of a much larger decline, as I haven't yet seen the strong evidence that this potentially orange wave 2, potentially yellow wave 2 has formed the bottom. In fact, the structure that we have internally in this move still seems rather incomplete, and another low is actually a very realistic possibility, especially as long as we do not get the sustained break above the levels of resistance. That is why this additional high within the yellow wave 5 would have been extremely important. It would have started to become more of a sustained break. This is why maintaining the momentum at the very least, which we can identify with this upward trend line, would have needed to hold. And this is why, since neither of these have followed through, the risk has increased exponentially. Now, this is not to say that other interpretations wouldn't still be possible. This is not even to say that pushing higher wouldn't remain an option. But I would actually like to see stronger evidence at this point, and we start looking in the smaller time frame to identify what types of patterns we can currently expect. So right now, I would have to consider that this would have potentially been a wave 3 top complete. It hasn't reached the ideal target, right? The 138.2% extension of the wave 1. This is really not ideal. But technically, it still remains an option. In that scenario, I would have to look for the levels of support down to the 50% retracement for the larger wave 4 correction. This goes down to $31.90. It is in line with some structural support we have in this area, but nothing of particularly high importance. If we get a sustained break even below this, well, unfortunately, most scenarios that would still allow a bullish pattern to emerge to higher prices would have a very difficult time materializing, as sure, we may see a larger pattern occur perhaps within a leading diagonal, still a 5-wave pattern up, but then we would track this as an ABC within a wave 1, and then we would likely have to build an ABC within a wave 3, and it would have to likely be a quite strong wave C. These are not the types of structure that I generally want to track, that I generally want to look for opportunities within, as they tend to be rather difficult to follow. Now, so far in this decline, we only have 3 waves down, which is a positive aspect. It has pushed into the 38.2% retracement, which is another positive aspect. This would be even the ideal target for the wave 4. And technically, the next wave up could materialize even from the current levels, but I do want to outline how this is kind of a ticking bomb. The more we spend in building this as a larger correction, the less likely it is to work out. Already, in my view, the probabilities of this setup aren't too great. I'm looking at 3 waves down, sure, and right now this correction is short enough, even for a possible double 1-2 setup. But the longer this correction extends, the less likely it is to eventually unfold within such a pattern, within either of these interpretations, as I once again expect the momentum to be picking up. Generally, we could still be looking for even lower levels of support. Technically, we could allow a retracement as deep as the 78.6% retracement, $28.40, but just visualize how this structure would have to look to build this correction. Would you consider this is a healthy move up, that this is a healthy pattern? We only have 3 waves within this initial push. This would already be an emerging downtrend, and the risk that this will not end up working out if this happens to develop would be extremely high. So right now, I am certainly watching for signs of a reversal, but I would ideally like to see the current lows hold. I only see 3 waves down, which is a positive thing. I see them as potentially complete, although this move a bit short. So the first sign that I want to see for an indication that we may see higher prices once again would be the break above the 78.6% retracement at $35.70. If we can manage to get through these levels, it may have yet another chance to see a breakout, but as it stands right now, the pattern presents significant risks that it will build something significantly more bearish, and right now, nothing is preventing me from even tracking 5-year move to the downside, where we could see rather directly much lower prices. Now, for those of you who are desperately interested in this, I do see a potential 5-year move up within the smallest of timeframes, but this is not a particularly reliable timeframe to track. And sure, you could be looking for a 1, 2, 3, 4, and a 5 to materialize. You could be looking at the very least for an ABC pattern, but for me, this is not going to be something that is worth my time. And for now, we will stop here. If you want even more from me, you can check out the Patreon. But yeah, these are the levels. This is the trade setup. I hope you enjoyed the video. And if you did, don't forget to leave a like, subscribe. And if you enjoyed the content and want to support it directly, check out the channel membership. And I'll see you in the next one. Bye-bye.